Hey everyone, welcome back to your weekly market outlook. Final June week for January 2025. If you guys in Australia, happy Australian Day, and you guys are probably enjoying a long weekend. But anyway, let's get started with a outlook into what has happened last week. Trump's inauguration obviously moved the market a lot. Bank of Japan interest rate decision luckily didn't move the market significantly. I think that's a good thing. So yeah, we're good. I think it was a pretty fantastic 2025 so far. We got risk sentiment returning back into the market. However, today we do have a little bit of a concern. Market in terms of the stock futures are actually falling down. So if you are looking at the Nasdaq, US 100, Dow Jones Industrial Average, yep, Japan 225, we saw a significant drop. In fact, the Nasdaq has been dropping about 400 points right now. Nikkei, it's nearly 1,000 points today. So just be mindful of that, whether or not we're going to be looking at risk on market. We might get a little bit of a risk off market this week. And part of that reason is, if we take a look at the schedule for this week, we have the Australian inflation number that's expected to be on Wednesday. We're expecting a drop from 2.5% to 2.3%. Also, Canada, we're expecting an interest rate cut from 3.25% to 3%. Again, for the US, we are going to be looking at the FOMC holding interest rates steady, but we don't know whether or not they're going to comment on the first week of Trump or whatever Trump has done in his first week. I doubt that the FOMC is going to make any comments on tariff. We don't have anything final on tariffs as well, more like threats or anything like that. It seems like tariff is a bargaining chip for the US government at this point in time. Other than that, Chinese New Year this Wednesday. Happy Chinese New Year to you guys. Kung Si Fa Cai if you guys are celebrating. But yeah, Chinese market is probably going to be quiet. Asian market is basically going to be quiet. Korean market, the Japanese market is also going to be quiet. Friday, we're going to be expecting the PCE numbers from the States. This is key. This is important because whether or not this match up with the inflation number that we have this month, that's to be seen. But again, PCE numbers is probably one of the bigger movers for this week. All right, let's just jump straight into the technicals here. Aussie USD still bearish. We have that bearish order block there. A little bit of a retracement has happened. And this is also mentioned in the previous outlook. We had that break above the resistance trend line. This does correct the Aussie USD a little bit. However, we're not off the danger zone yet. We have Ichimoku cloud coming in exactly at where the bearish order block is currently located, around 63.50. That's also resistance one weekly. We expect this level to hold as a resistance, so just keep an eye out there. We might see continued sell-off if price gets rejected there. Support-wise, it's still going to be 62 cents, so we do expect price to potentially continue up towards 63.50 and then move back down below to 62 cents. But again, the pivot level is definitely key. Pivot at 62.75. Any daily close below the pivot level will trigger that push lower towards 62 cents on the Aussie USD. Next up is the Euro USD. Very similar situation here. We had that correction. We had that break above the resistance trend line. Remember, this is a 3-month resistance trend line since October. We had that broken. We started that correction. That correction seems to be at the end of it. We are facing Ichimoku cloud. We are facing order block. We are also facing psychological price level at 1.05. So yeah, expect this level to be tough, tough to be broken. And obviously last Friday close in the market, we basically have a liquidity sweep at 1.05 as well. So very sharp rejection there. Market gaps down today on Monday. Again, pivot level here is going to be key, 1.0425. Any daily close below 1.0425 would actually confirm that the correction would have ended. And we might see price push down towards 1.03 and then eventually towards 1.02 on the Euro USD. Similar situation with the Pound USD. Again, it's stuck at a very important key level at 1.25. Strong psychological price level. That's also where the bearish order block is currently located. That's been capping the market. We might see further progress on the sterling here compared to the euro or the Aussie. I think one of the trigger for Aussie fall could be if the inflation comes in a lot softer. I think market is expecting the RBA to start cutting aggressive. That could send the Aussie down significantly quicker. But for sterling here, we might see price kind of just hang around the 1.25 level until the stochastics resets itself. The RSI is already losing momentum here, and because this is a strong downtrend, we're going to be focusing a lot more on the RSI. If the RSI fails to go above 60, then we expect trend to continue. And also taking a look at where it got rejected last Friday, we're definitely keeping an eye out 1.25, 1.2550. This is going to be a strong resistance. And any rejection here, again, moving back down below the pivot level, which is anywhere below 1.2380. So that push below 1.24 could actually send sterling all the way back down again. In terms of where it can go, 1.23 is the first support that we're going to be identifying with, then 1.22, and then eventually 1.21, which was where the low was this month in January for the sterling. So the general tone in the market here is that I think there's a lot more caution here. I think there's a lot more potential for the US dollar to kind of complete its technical correction that we had last week, and it might actually continue to recover stronger. So this could put off the market sentiment into, it would actually switch it back to negative. So just keep that in mind if you're trading the majors here. And lastly, we have the dollar Japanese yen. And again, the Bank of Japan interest rate hike, there was no volatility. I think it was a good sign. In fact, if we take a look at the movement on Friday, on the initial reaction of that interest rate hike, we saw price on the dollar Japanese, we saw Japanese yen strengthen to 155. But it stayed there for 6 hours, and every time it hits 155, people are just scooping up dollar Japanese yen. So I think market wise, I think they're looking at the Bank of Japan interest rate decision and it would say, yeah, do they have more rate hikes this year? I think that depends on the wages number that they have been talking about. That would be in March and April. I think for now, at least for the next 3 months, we're not in a rush, or is there any concern for any interest rate hikes again from the Bank of Japan. So I think that boosted the carry trades that we are looking at here. People are just scooping it up. So right now, the key level to bypass is 156. At time of recording, it is at 156, but once it bypassed 156, and if there's a Monday close above 156, it would actually instigate further push higher towards 157, 158, and 159. The range between 157 to 159, which is 2 yen's worth, this is also the bearish order block. That's where the dollar yen is likely going to face a lot of resistance. But once it clears off 159, I think we might actually see price just rally up significantly higher above 160. All right, so that's pretty much it for this week. Again, good luck with your trades, and I will see you very soon.